Welcome back to the Home Expansion Podcast, where we can help you expand your mind, expand your life, and expand your territory. I'm your host, Moises Rosales, with the Home Expansion Real Estate Team. And today we're diving into a topic that affects every family, entrepreneur, and homeowner: retirement planning and life insurance. Did you know that more than 500,000 Americans say that they either don't have enough life insurance, or they don't have it at all? And every year, U.S. insurers pay out over $200 billion in benefits. Proof that that is real protection, not a theory. So my guest today is Jasmine Mazariegos, and she is a retirement and life insurance broker with her own agency who is helping families turn fears into freedom through financial education and legacy planning. So Jasmine, welcome to the Home Expansion Show. I am excited to have you here. Welcome.
Awesome. Thanks. I just want to say how honored I am to be here today with Mo and Maria for having me as a guest. And I'm excited and I'm just excited to share just a little bit about what we do and to share value with you all.
Awesome. Well, welcome. I know that you've been in the life insurance game for a little bit. Tell us a little bit about your history. You know, what got you into life insurance and what do you love about it?
That's a great question. I get that all the time. So I did not come from money by a long shot. I was originally from Delano. My parents had me as teen parents, so I didn't really necessarily have examples or a path to be successful in life. So I went to a university, got my bachelor's degree, thinking that it would open a lot of doors for me. But with that being graduating in 2021, all those doors were shut. So I ended up pivoting completely and thinking that if I learn finance and have a mentor in my life, maybe I can change everything around. So I joined the industry kind of by accident. Somebody said, hey, you can learn about money and learn how to invest and teach other people. And if it works out, great. And if it doesn't, you can keep looking for a job. Thankfully, I never had to go back into looking for a job. I've been in the industry now for going on to 5 years. But with my upbringing and not having any financial literacy in my life, I just was so passionate about money and being able to help others. And I started realizing that I'm not the only one who feels that way.
Nice.
So,
you know, I'm gonna give you something. You know, I like to recognize talent, and when we see talent, Maria and I, obviously been in this industry for over a decade ourselves, over 20 years in just, sales industry, customer service industry, so many things that Maria and I have done in the past. So, when we see individuals who have the discipline, the consistency, which are very few, right? We love to bring him into our space. So I do want to say that we do see that in you and in Larry. It's kind of like a younger version of us, Maria and I, when we were very young, we used to get super excited, be like, where we're going to go, what we're going to be doing. Imagine when we make that money, what we're going to buy, where we're going to visit, right? And so we see that in you and Larry. So congratulations on all your achievements, all of your hard work, because it definitely shows in how you show up in your space. So congratulations too.
Oh, that means a lot. And it's really nice to hear too, because I've known Mo and Maria since I started actually in the industry because of a mutual friend we had, and I was so inspired. I'm like, oh my gosh, like one day, I know different industries, but I definitely saw a lot of similarities. I saw a lot of myself in Maria. I always consider myself a mini Maria from a long shot, and she inspires me a lot. So it does mean a lot that people that we look up to see that in us.
Oh, for sure. We see hard work. We got to recognize talent. And I know that we don't say that enough, especially in these type of industries when it comes to mentorship, when it comes to work. It's like everybody's always out to get one another in some way, somehow. But one of the words that Maria and I always live by is collaboration, finding people that we can collaborate. And that for us, AKA, means family. That for us means inner circle. That for us means friendships, relationships, connections, right? And information too. So welcome to our inner circle.
I love it. I'm excited. I wish Larry was here. He would love it.
You just got an invitation. Look at that. Awesome. So tell me, so what does financial security mean to you personally? I know you mentioned right now, hey, I didn't come from money. I'm doing this. I'm first generation wealth builder, just like Maria and I. For us, same thing. We're first generation wealth builders. We're going through all of the obstacles of understanding how to create wealth, obviously through real estate, but also even in the insurance place, right? Understanding, where to put our money, how to leverage our money. One of the biggest things, how I see leverage, right, is really understanding how to put almost like your money on an escalator where it just runs on its own, versus us trying to carry up the ladder or up the stairs, right? Mm-hmm. That for me is like income. Me going out there creating income is running up and down the stairs physically. But when you can put money into like an escalator and let it just do its thing and go up over time, that to me is leverage, right? And I feel like insurance to me is it's a leverage tool as well. Besides obviously the protections we'll get into, but it's also a leverage tool to be able to expand the hard work that we put on every single day. You know, so what does financial security mean to you personally?
That's a great question. And it's different for everybody. But for me, it's being able to like support my family, like be that go-to person or that foundation if anybody needs me. Like I'm only a call away. They know that I'm the rock of the family. Like, I don't know. That was really, really important to me. Also just being able to get out of situations that you may not want to be in. So for example, if I wasn't dedicated to building wealth or my craft, I might have to go back to a job, even though I don't think a job is financial security, but I would lean to that if I wasn't just preparing myself, like saving and investing and doing my due diligence. So one, being that foundation for my family, knowing that I can take care of them. And then number two is just avoiding putting myself in a situation where I'd have to go back.
For sure.
And working for someone else.
Okay, cool. You know, I know I'm hearing you say something, you know, because I always, there's a quote that I like to share. You learn in your 20s, you earn in your 30s, and then this is my new word now in my 40s. I just turned 40. You learn in your 20s, you earn in your 30s, but you leverage and multiply in your 40s, right? And you know, one of the things you said right now was, you know, learning to like multiply and not working for other people and really putting your own time and efforts in and really getting them to work and multiply for you while you're sleeping, while you're doing what you're doing, working another job or whatever it is that you're doing. But what is the biggest fear people carry, at least to you, when it comes to talking about money?
They feel like they're alone, like they're the only people struggling, that nobody can relate to the situation. Or the other thing they don't acknowledge this about themselves, but I can see it. It's they live in scarcity. Like their mindset is so like different from what mine is. It's not maybe that they don't make enough money, but they believe that they don't make enough money, and the belief that they have around money is what holds them back. So they don't know it, but that's the biggest problem people are facing right now.
Can't believe.
Yeah, belief, or like that's not possible for me, or I can't save $200, or I can't even think of starting anything else right now because I have no time, and if I have no time, like how am I going to make more money? So it's this constant cycle of scarcity around multiple things that holds them back.
And whether you think you can or can't,
you're right,
you know. And I think that I agree with you, you know, financially, when it comes to making money, it's you have to break a lot of limited beliefs, deep rooted beliefs, cultural beliefs, generational, environmental, seasonal beliefs that you have to break to make money. And I know personally myself that, you know, Maria and I had to go through those processes to understand. We also had to go through the process of spending money and identifying what was the difference between a real, because everybody talks about assets and liabilities, but what really is an asset and what really is a liability, right? Like an asset, like let's be honest, like Starbucks is not an asset. You're making somebody else rich, but you can make your own coffee at home for half the price. You're still making somebody rich, but at least you're saving half the cost. Does that make sense? So little moves like that, you know, you realizing this is the same coffee. Yes. So little things like that, right? But both of us are faith-driven individuals. You know, our companies are based on faith-based practices, and also we speak with faith, right? And one of the things you said was people don't believe, and I feel like believe has some type of a correlation with also your faith, right? You know, how do you help people, or how do you help clients believe?
That's another great question. So people have to see it. I know belief is like having faith it's going to work out, but a simple way we do it is like we look at their budgeting sheet, or we look at their personal finances, and we show them like, hey, look at all this money you were spending here. Look, you do have money, you're just spending it here. So what if we put that money here? And they're able to see it, and then if they practice it, the belief and the conviction goes up over and confidence happens too by taking action. So just showing them from a small scale of like, hey, these tiny little changes, see, like you can do it. But then at the end of the day, it also comes down to faith, because you have to have faith that if I consistently invest for this X, Y, and Z years, that it's gonna work out for me long term. Yeah. And you can't see it yet, but we know that it's there, but we just got to believe that it's gonna work out for us. And same thing in business. Consistent efforts compound over time, and you just have to have faith that those efforts will compound and be there for you later.
Yeah. Business, life,
money,
even fitness.
Oh, fitness.
Right.
Yeah.
I mean, fitness, you don't see it either. I mean, you feel it, but you don't see it and sometimes you go hard for 3 weeks, you still don't see or feel it. Right, but you have to have that faith and that belief that eventually your body will catch up and change. So I do agree that's a great analogy. So most people think that life insurance is just another bill, right? So, but actually one of the most powerful wealth tools that is available today, and if you talk to some real wealth builders, right, insurance is always part of the game, just like real estate. Just like real estate, right? So break down the difference between some of the terms. I know I don't want to spend too much time because I feel like there's enough information about what's term, what's whole. To you personally, what is the difference between term, whole life, index, IULs, all those things?
Yeah, absolutely. So just piggyback off something Mo mentioned, like real estate and life insurance has been a huge combination. And one big company that used both was McDonald's. Without IUL policies, McDonald's wouldn't have been funded. Neither would Disneyland. And they both require real estate because it's land and a big business. So just an example. And you guys, there's books on it too, so you guys can do your research. But in simple terms, like Mo said, there's a lot of information. So to keep it simple for you guys, a term is a great product for 3 recommendations. Number 1, you have kids, automatically protect your kids. You can have it for 10 years, 20 years, 30 years. Perfect timing there. It's also perfect for my people who are balling on a budget. Like if you want something, yeah, like it's affordable, cheaper than a Chipotle bowl. That's what I tell everybody. Like there's no excuse not to have it. And then the other best recommendation for a term is you can go up to 30 years. So automatically a 30-year home loan, you can cover it for 30 years on a term insurance. And it's done. Those are be my 3 easy recommendations. How else you feel about it and how to leverage it is going to be up to you. But terms easy.
Cool. For a new family or somebody that's creating a family for the first time in their year 1 of marriage, year 1 of buying their home, which policy makes more sense?
Good question. So I would say term for sure, because you just bought your home. You're going to, obviously that's a big difference in what your payment was a month prior. So that's something to get adjusted to, but you get it as soon as you can. So I would even say in the same month that you're qualifying for your home, get a term insurance for the price of the home for the 30 years. I promise you it's going to be the cheapest thing that you open up in that home buying process. But it's there because God forbid something happens to you. It's going to pay out. It's going to pay out to your entire family. And if you work with the right agent and you have living benefits, it'll not just pay out when you die, but if you get cancer, that mortgage still has to be paid. If you get a stroke or heart attack, that mortgage still has to be paid. So at least with the term with living benefits, you can get that advance and you can pay your mortgage, pay any other bills, and not have to go into foreclosure or add any financial stress on the 2 people who are on the title of the home.
Yeah. And I feel like right now the message that I'm seeing it in the insurance world, right? I like to pay attention, right? Is I feel like people shifted from let's protect or think about after retirement or even potential death to now let's build cash value. Like that's where I feel like most of the push is at. They're pushing, sales or just insurance reps are pushing the cash value. Can you explain that? What does building cash value mean? Right, when it comes to insurance policies?
Absolutely. So guys, you can build cash value in permanent policies. So 2 different forms of permanent policies would be a whole life and an IUL. They're very different. So there's information out there, but to keep it simple, a whole life is a fixed growth. So it can pay you between 2% to 5.5 max, but it's a dividend. So it's kind of paying back their shareholders. Like, thank you for being a policy owner with me. I will pay you back. But if you're trying to build cash value through a whole life at a 2 to 5.5%, it's going to take a really long time. So it's also more expensive in comparison to universal life. So just keep that in mind. If you're trying to build cash value and you have a whole life, you're just not going to build a lot of cash value. Just keep it simple. But there's also IULs where it's still a form of permanent coverage, but instead of it being growing at a fixed rate, it is more dependent on an index fund, for example, the S&P 500. So you can attach the S&P 500, which is a really powerful index fund here in the US, inside of an insurance policy and let it grow. So your growth can vary between 0% to 19, 20%, depending on what it does that year. However, 20% returns on $0 is still $0.
Yeah.
So in order to build cash value in policies, they have to be funded. Yeah. You got to put money into them. So I think that's just a misconception of like people want cash value without cash.
Right. It's like, I want to buy real estate or I want to earn real estate equity without buying real estate.
Exactly.
Without owning real estate. Okay. Makes sense. Great analogy. Good. Awesome. So what is the number one mistake first time buyers or insurance buyers do?
Good question. So not understanding how the policies work. So I like to do a blend. So if you want coverage, like you really value life insurance protection for your family, and you value cash value, just be mindful of if you increase your death benefit, which is the amount of money that you're purchasing, and you're funding a policy, your cash value may not be so high because you're buying a $1 million policy with a $200 premium. There's not going to be a lot of cash value. So biggest mistakes I'm seeing is people are either purchasing too much life insurance and not funding it accordingly, or maybe the opposite effect. Hey, they're purchasing too little coverage and they're not able to contribute as much as they want to in a policy to get cash value. So just it really comes down to how much life insurance are you purchasing and how much are you contributing monthly. Those two factors.
And I'll add one more thing is who's guiding you through that process, right? I mean, would you agree? Like, depending on your and your insurance rep also would depend if you're set up correctly or not.
Absolutely, and that's actually leading to why IULs are there's a lot of misconceptions and a lot of bad reputation because they're saying they're not performing, or maybe the cash value is not as quick, or it doesn't pay out. All these factors do come into play, and it really comes down to your agent properly educating you on how the IUL works. It is a complex plan, easy to understand, but it's complex. So I would say as long as you have an understanding of why you got the amount of coverage and your premium matches, it should be pretty good. And the good thing, they're flexible. Like, you can always increase your contributions and decrease your death benefit, so it's not set in stone forever.
So it's variable. So because I know there is variable IULs out there.
There are variable where you can make money and lose money, so it's variable. And then there's index universal life where you don't lose money.
Okay.
The floor, depending on your company, should be 0% to 0.75%, so you're still positive. But in terms of flexibility, like, you can increase and decrease your contributions as you wish.
Nice. What is one insurance policy that you feel is like underrepresented or maybe not talked about enough?
Absolutely. This is my favorite question. So living benefits, like, it's not necessarily an insurance policy, it's a rider on these insurances, but only very, very, very few companies offer them. For example, National Life Group, Transamerica are two of the biggest companies that I've seen so far in the insurance space that offer living benefits for free.
Okay.
And you can have AAA, Northwestern Mutual, you can have a couple other, I can't even think of, State Farm. All of those companies don't have living benefits for free, if not at all.
Okay.
And California is really difficult to get them added. So that's honestly, I would say the living benefit rider is the most underrepresented asset.
So if our audience was 12 years old, which they're not, but how would you explain living benefits to them?
Living benefits. So if you get sick, if you get diagnosed with cancer, a heart attack, stroke, dementia.
Tummy ache.
Not necessarily a tummy ache, something pretty life-threatening.
Okay.
Where if you don't seek medical attention in like 12 months and it could be detrimental to your life, the life insurance policy will advance a portion of your life insurance to you now, and you don't have to pay it back.
Got it.
They're not asking where the money was spent. It's free money.
Is it like Aflac almost?
Aflac, from my understanding of Aflac, is like you get hurt and then they reimburse you a portion.
Yeah.
This one's a little bit different because I don't know if Aflac you have to be like sick. I think you could like break a bone and still get paid.
Yeah.
With the life insurance policies, it's a medical
condition.
So it's
like more medical, like more severe.
Yeah.
Okay. Aflac's more like, hey, you go to work for a week, 2 weeks because of something, they pay you. This is like more like, okay, got it.
Right. And it's not like a disability either. Like you can't break a hand in 3 months and still claim it. So something is pretty severe, like cancer. Like, it doesn't have to be life-threatening though.
Okay.
Like just day 1 cancer, 12 day.
I mean, diabetes.
Severe. If you severe diabetes, like you're going blind, you're starting to like through your toes, like that level.
Got it. Okay, cool. So obviously most of our listeners are, homeowners, investors, people looking to buy, sell for the first time in real estate, custom, semi-custom, building homes and all those types of things. So let's talk a little about kind of like insurance and how insurance fits into their real estate strategy, and it's one of my favorite questions because this is really where I'm expanding more of my knowledge, is understanding how I can leverage. I mean, I've used that word multiple times, is how can I leverage my money? And I found that insurance is a place where I can leverage my money. But then the next point is, how can I leverage insurance now to get it to use to either purchase, buy more, do something in real estate, right? So how can real estate owners or use insurance to protect? Let's talk to protect first their investment and their mortgage.
Yeah. And I can give you guys more personal stories because everyone can relate. So I own 2 homes with my husband, and what we ended up doing is we ended up purchasing $1.5 million of life insurance through term only. So it's for 30 years. Both properties were bought 13 months apart, so pretty similar. So 2 30 years policies for 1.5 million total with living benefits. So we did that to protect our assets, because I'm an asset just as important as a home is. So if I get sick or my husband gets sick and we can't pay the mortgage, we'll get advance that money. But if I die, there's already in writing in the trust that the 1.5 million will be used to pay off the properties, and my husband can maintain our assets as an inheritance, and he doesn't have to pay taxes. It's in the trust. There's no taxes on life insurances that get paid out too. So we use that way to protect our assets in terms of something happening to us.
Nice. So it's a protection clause, right?
Mm-hmm.
You know, Maria and I always laugh. You know, she asked me last time, a couple of years ago. She said, "Hey, how much do you think we need as a coverage?" You know, and obviously we were joking around, but I was like, "Well, if you want me to mourn correctly, properly, obviously making sure that everything gets paid off, and that I can go on at least a 6-month vacation to the Bahamas, and take our beautiful girls there, so we can really remember you. Probably about $10 million, so that way we're taken care of." And we were laughing because those are, sometimes we gotta look at those things and just laugh about them too. At first, I remember insurance was such a subject that was so like, for us, was like, oh my God, again, first generation builders. So we were like, what do you mean? Like, how much do we need if I die? Like, who thinks about those questions? Who asks those questions? But over the years, we've got way more comfortable with this type of subject because it's important, something that people don't talk about. And at first, it is very uncomfortable. But then as the more you practice it, the more you do, the more you understand it. And it becomes just a regular subject for us now at our home, right? So what role does life insurance play when it comes to somebody that wants to build real estate as well?
Yeah. So, in order to build real estate, so you can actually, this would make more sense for cash value policies.
Okay.
So, not specifically whole life, again, because it's going to take so long for it to grow. But if you use an index universal life policy, you can do lump sums. And this is actually really, really perfect for my wholesalers or people who just have a lot of cash on hand. Yep. You can deposit money, but be very clear with what the intention is with the money. You can do large deposits, and you can actually borrow against your cash value day one. Because you're putting in so much that some companies will give you a little bit more leeway. So you can actually either, number one, withdraw the $100,000, say you put that in there, and no questions asked, it's there, or you can borrow against it at a loan. And the loans are really simple. Let's just say 3% loan. Yeah. So now you have $100,000 growing in the stock market, like the S&P 500, tax free, no market risk, and you can still get a loan for $100,000 for real estate at the same time. The misconception is you can only borrow against what you've been able to put in first. All right, you can't put in $200 and get $300,000. No. But if you have that kind of cash, you can absolutely do it. And God forbid you default on the loan, like I die, it'll actually come out of your death benefit. So if you have $1 million life insurance policy, $900,000 would get paid out, but you still got the $100,000 to begin with. So I look at it as a wash.
A wash, yeah. I think one of the most popular stories that came to my head was in 2024. One of the most talked about real estate purchases, was Jay-Z and Beyonce buying, I can't remember the number, but they bought the property cash. Mm-hmm. But as obviously people do digging and understanding, is it wasn't cash. Actually, they borrowed money against insurance policies, and got money and made the purchase cash. Yes. However, though, that money came from the insurance policies that they had. Obviously, multiple insurance policies. Can you explain how that works a little bit more? If somebody's starting to say, how can I build something like that? Obviously, we're not going to, I don't know if we're talking about, same leverage as Jay-Z, but, at some level, can somebody create that kind of leverage, right? And how long would it take to create that leverage to be able to borrow against some insurance policy? How much do you think, if I wanted to buy even $1 million home, let's call it $1 million home, how long would it take for me to actually create a policy or policies for me to have access to that?
Yeah. So, no matter what policy you get, there's something called surrender charges. As long as you're surpassing your surrender charges, you're not going to get into any trouble. Okay. So, for example, surrender charges are for the first 10 years, and on the 10th year, they're the highest. So they're going to restrain you a little bit more in terms of accessibility, but every year it's going to go a little lower. So after 10 years, it's 100% liquid. You don't have any restrictions when it comes to money. But it's really going to come down to to borrow against $1 million. I guess the question would be, how quickly can you get $1 million in there? Because they will never give advance more than your premium. So it's going to come down to okay, how can I get $1 million in there? So if Jay-Z, let's say, borrowed $24 million, that means he's had, if not more.
He has more than that.
In that account to be able to leverage that, or equal or more.
Tax-free too.
Tax-free. So why would someone do that? Well, if you guys are looking at the market right now, Mo can talk about this. The interest rates on housing right now is not 3%. Mm-hmm. So even if it was a hard money loan or even like FHA, conventional, it's not 3%. So why would Jay-Z do that? Well, I would rather take a 3% any day compared to anything else right now. Yeah. And it's his own money. So this is what we call infinite banking. You're leveraging your own cash, just like the banks are doing. You don't lose money. And and it's growing.
So explain, because that's my next question. And my next question right here is explain infinite banking. And explain it in a way, we'll get deep into it, but explain to for somebody that's hearing it for the first time.
So infinite banking, the simplest way I will talk about it, guys, is we're doing what the banks are doing. The bank is using your money, leveraging it out, and adding interest. But instead of you leveraging and the bank's using your money for everyone else, you're leveraging your own money. So you're putting your money into a policy that, like we're talking about, let's say you have $500,000 or 200,000, and you want to borrow against your own dollar. You can, and it can be a 0%, just a withdrawal, or it can be a 3%, and you can decide for yourself if you want to, which way you want to go. And then you can use that money for anything that you wish. So if you're like a wholesaler and you have 200,000 and you want to flip a home, you can easily, you take the 200,000 out, use it for whatever you need, put it back if you want to, or so you're not getting charged 3%, or you don't have to pay back, but that money can be used over and over and over again. So infinite banking, guys, is just using your money in multiple different ways.
Got it.
But there's tax loopholes around it. So insurance is tax-free, and technically you don't pay taxes on loans. So that's where the loan aspect comes in. Like even if it's a 0% loan, it's still a loan.
And then the interest rates that you're paying becomes tax write-offs now at that point, I believe.
It could be. I would ask the CPA, but there's so many things.
You're right.
And depending on the company, I'm just giving you guys a 3%. Depending on the company, sometimes they'll even give you like 1%, 2%. So I'm just giving 3 because it's ballpark, but it can be so low. But just imagine 3 is the highest.
So infinite banking really just means you become your own bank. You become your own bank, and you're borrowing money based on your premiums, based on your cash values, based on what you're putting in.
Your own assets.
Yes. So that means that, to answer my question earlier, was then how quick can I have access to, just say, to $1 million? Then how quick can I make my policies, my cash values get to $1 million or more? So then I can then go back and do that. Now, question then. So if let's just say I did have $2 million of money, equity, cash value in my policies, where would I go get that loan then? Do I go to a bank? Do I go to the loan sharks? Who do I go to?
Good question. So you go back to the company that has your policy. So let's say Transamerica has it. You would easily, there's no credit check. There's no nothing. You're just saying, hey, I need to borrow against this. You submit the paperwork and it can be approved. Again, the only trouble you're going to have, if any, is obviously just what you're borrowing has to be in that account.
Yes.
And that's really what it comes down to. And the money can be, they're going to ask you, do you want it wired? Do you want a check? Or do you want a deposit? Like, what do you want? It's that simple. We've seen it done over and over again. Yes. And they're not asking for a time block. When are you going to pay it back? There's no contract. It is your money. And that's why the companies are willing to do it, because you've already up front your own money. So there's not really a big risk for the company. So that's really where it comes in.
So hopefully if you're listening right now, I think that this is an important point, because up to this moment, until right now, you explaining it to me makes a lot more sense, because there's been a lot of like blocks that I've been running through when it comes to this. Okay, how do I put this money? And we're building it, but it's like, how do I have access to it now? You just told me exactly. You just go back to the same companies and tell them to wire that money, and that gives you opportunities. Why is that important in today's market in real estate when it comes? Because there is opportunities right now, and if you have $300,000-$400,000 just waiting, just sitting there, this is the next part that I'm excited for in my life, which is leveraging now insurance money to be able to go gain more assets, to then do it again, to become like this infinite bank, right? So that's super exciting. So, okay, so let's shift a little bit here. And I like to talk about building legacy. I feel like the word legacy is thrown around a lot. But for many, it's just a concept until someone like us or you shows them how to actually create legacy. So what does legacy mean to you personally?
For me, it's what people can do because of you. It's not necessarily how much money you leave behind, but it's with the resources and everything I've been able to teach somebody, like maybe my future kids or my parents. It's what can they now do because of what I've been able to accomplish with my time on earth.
Yes. And that's important, right? That's that's literally like you stole the words out of my mouth, because for me, legacy is the same thing as what can my kids have access to? What opportunities can now they go create, right? What the amount of knowledge, right? The amount of experiences, or even just the people that they can have access to because of what I was able to do, right? So that's definitely what a legacy means to us. So how do you bring children into money conversations early? I know that for me is an important subject, right? And I feel like that's definitely a place where insurance, I feel like there's a need for this type of conversations, and there's not enough. I feel there's some people talking about it, but when I first got into like learning how to create and policies, my question was like, well, what are my kids? I mean, you guys tell me they're amazing benefits for me, right? And I should start young. And then I start asking the question, how soon can my kid have insurance, right? Or how soon can they have policies? And talk about, maybe like even the benefits of a child, because I know that you can have a policy as soon as 9 days, 3 days, I don't even know the number, but as soon as they're born they can come out with the policy. So kind of explain a little bit about children policy and that conversation that you have.
Yeah, it's actually my favorite topic because we know the secret to building wealth is time in the market, not timing the market. So if you start a baby off at 3 days old, technically it's 15 days old. So as long as you got a 15-day-old baby, you can legally open accounts in their name. Depending on like what kind you want, but we call them $1 million baby plans. And I think I even shared one with Maria. So if you open a permanent policy, like a life insurance policy, like an IUL for a baby, and you contribute money into it, let's just say $300 a month, it's guaranteed every single time. At a conservative 7%, that baby will have $1 million by the time they turn 60. So obviously you want to tell them like, hey, you might have this coming your way, and educate them. So it doesn't automatically get transferred to the kids. You do have to transfer it to them. So you can say, no way, Jose, I don't know if I want to give it to you anymore. I'm going to keep it for myself. You can do that if you want to. But I like it because it doesn't disqualify any children from opportunities like going to college, qualifying for financial aid. So you're still able to get the best of both worlds. But I also like it because it's tax-free wealth. It compounds over time. The earlier you start, the better off you're going to be. But really having the conversation and involving kids earlier, because at the end of the day, God forbid something happens, those kids will receive everything that you work so hard for. So just preparing them and into the conversations.
I just say it like this: focus on the positive. Let's not focus on the negatives. Let's focus on the positive. If you yourself, right now at this moment, your parents, right, gave you $1 million, right, or even when you were 21, gave you $1 million, how will life would have been for you? Makes sense, like, or even at 35 or 30 or whatever it is, because I know that you can do whatever you want. But even at 30, right, if my parents like left me $1 million right now, at my age right now, and I had access to $1 million, you know what I would create, right? So it's like that's the question. I know that there's a lot of things you could do. There's things that I did with my policies. I was like, okay, look, my girls can have access to this money only if, and I told them exactly what they need to do, right? And I'm talking about, I was very specific. They're not gonna get this money unless they meet some requirements, right? So, so that's very important. So, I know that, about 42% of U.S. adults say that they need more coverage, right? So, let's talk a little bit about coverage. How do you know what kind of coverage you need based on what?
Assets. So, and also debt. So we always call it the dime method, and it's not my method. It's just out there. So
method, yep.
Yeah. So there's debt. There's your income, typically 10 times your income. Then your mortgage, and then any education that you want to leave behind. So if you have a kid who wants to go to Harvard, or maybe like USC, or maybe just CSUB, for example, you want to just calculate how much money that's going to cost, and then include that in your life insurance. Or simple way, just 10 times income. We always recommend those two.
Okay, good. So assets, income, and debt.
And your mortgage.
Oh,
right? Yeah, assets too, but yeah.
Yeah, okay. Okay, cool. So let's have a little fun. You ready to have some fun? You know what I want? I call it role. Let's call it a role playing. I'm give you a couple of some myths that I hear, and you just kind of give me your rebuttal, your how you will actually deal with them in person, right? So are you ready? All right, here we go. So my favorite one, and the first one is life insurance is a scam.
It could be. It could be. So this is my favorite thing to talk about, because I really want to be transparent, guys. Life insurance, it could be simple or it could be complicated to understand. And maybe the agent isn't representing you, or isn't educated, and we buy a policy and it doesn't pay out. That's, in that sense, I say the life insurance didn't scam you, the agent scammed you. So these are just really, really important things to keep in mind. But is life insurance a scam? No, they're legal. They've been around for many, 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 many years. And the sad thing to think about it, guys, I usually get this the most from lower income individuals. So just be mindful. Hey, are we breaking those generational curses when we're giving out bold statements like life insurance scam? Because you could be discouraging someone else who might really want it, but because of our lack of literacy or understanding, we're taking the opportunity away from others.
So let's extend that question. Life insurance is a scam because I don't benefit from it.
Good question. They should have got an IUL. You got an IUL? Yeah, if you get a term policy, I always say this, lo barato te sale caro. So if you're buying a term policy and you're just in it for the cheapest thing, yeah, you're not going to benefit from it. Same, maybe someone else will. Yeah. So if you want those benefits, you're going to have to put a little bit more premium.
Yeah. And you know what? I'll share something to be vulnerable. I remember Maria and I were sitting down in front of when we were talking about insurance. And I remember feeling like, man, like, why would I buy into this knowing that I won't benefit from it? And this was the very early on in my career. I was like, wait, But I'm paying for something that I don't have access to. And at that moment, it was one of the biggest gifts that I received. It was like, no wonder our parents, grandparents, ancestors, and depending, right? They never did. Is because they probably felt the same way. Like, why would I pay for something that I'm not going to benefit? But then at that moment, I had a choice to make, right? I was like, okay, legacy. What does legacy mean? It's like giving people opportunities. So this is not just for, it wasn't, I know it's not for me, but it's definitely for the people that I leave behind, for the generations to come, my children, their children, their children, their children, right? So, good. Awesome. Next one. Ready? Insurance is way too expensive.
It's also true. It could be. It could be. So, another way to look around it, guys, get it as young as you can. I would say as long as you're 18 years old or older, you can get it on your own. If not, our parents are lucky to get it for us. But it can be if you wait too long. And that's the sad truth. Remember, guys, it is a liability that the companies are looking for. And if they feel the risk is too high, they will charge you for that risk, just with car insurance.
Yeah. And also based on, I feel like, and actually talking about car insurance, right? I mean, I think there's a lawsuit right now going on that I was watching like an interview. People being interviewed saying that they were quoting people based on age, gender, right? It's like if versus just like in their quote was based on that. It was like, dude, that's against the law, right? So, but for me, like it's too expensive. It also depends on your rep too, right? Would you say?
It could be.
Right.
Yeah, depending on the company you work for.
Experience of the rep. Right.
Could
Okay.
be.
Good. Awesome. Which kind of goes into the next question, which is, I'm young and healthy. I don't need it.
Oh my gosh. If I can go back and talk to every person who thinks that way, I'm like to shake you to be like, you have no idea the wealth you can provide because you're young and healthy. Oh my gosh, I'd be a millionaire. But yeah, that's exactly why you should get it. Because the sad thing is, guys, is if you don't get it, unfortunately something does happen to you. It's the first thing people look for, surprisingly. Even you could be young and healthy and still die.
Yes.
Happens all the time.
I agree. It's like, one of my favorite jokes is, a guy goes to the doctor to get a diagnosed. The doctor, diagnosed him with lung cancer. He goes, "Do you smoke?" He goes, "Yeah, I smoke 20 packs a day." He goes, "Okay, good. Well, congratulations, you have lung cancer." He goes, "Oh my God, doctor, what do I got to do? What do I got to do to change?" He says, "Dude, just keep smoking. You're done. It's too late now." Right? So it's like, I think that a lot of us wait for that type of situation in life to take move. So if you're at the healthiest you've ever been, this is your opportunity. And again, if you've listened to this entire recording here, I mean, I hope you were inspired to see, like, it literally can start a chain of events for the rest of your life. We talked about infinite banking. We talked about, just cash, value. We talked about leveraging and putting your money that you work so hard for into things that can help you multiply at a faster rate. Again, I wish I would have known this information a lot sooner, especially when I was young and healthy, right? So, okay, awesome. Next question. I just invest the money myself.
I love this. I always tell them good luck, right? Because if it was that easy, guys, a lot more of us would be a lot more financially successful. But we are human beings and we're very emotional creatures. So if you have to invest on your own and you're not really familiar with what's going on and you see dips, we sell. We are very, very emotional creatures. So yeah, never works out that way, guys. So I always say good luck, or, when they're open-minded to work with a professional, right? Don't talk to your uncle. Everyone has that uncle that's like their financial advisor but has no assets, no retirement, no life insurance.
He has the change, he has the nice truck, but that's it, right? Nothing outside of that.
And they're very bold. So yeah, just don't do it yourself, guys. And plus, to even get life insurance, you do got to work with somebody. Even if you're online getting a quote, you still got to get connected with somebody. So just ask questions.
Okay, awesome. People just want to make money off of me. That's why.
Who doesn't? You're getting sold something every single day. You pull up Instagram right now, there's gonna be all these ads of everything you talked about yesterday right there. So I tell you guys,
click here, click there, buy this, buy that.
Right. So if I don't convince you or show you value to put money away somewhere else, someone else is gonna make you put money with them. So I mean, say what you want, right? It is our career, so we do get paid to do this, but at least we get paid to do something good versus you buying a car that you clearly don't need. We all got to make a living, but it's just, what value do you provide?
Okay. I'm single. I don't need it. I don't have kids. I don't need it.
Oh my gosh. I get this a lot from my younger men. So if you're a young man getting this, like, this is for you. It's not necessarily like you don't need it, but it's like, well, if you were to pass, like, are your parents in a position to lay you to rest? That financial burden is not you passing on someone else. It's someone else going to take it because of you.
Yeah.
And that's exactly when you should get it. When you're single, married, no kids, and you're healthy, that's when you should have got it, because we're about saving money. It's the cheapest it's ever going to cost you. So if you want to wait till you have all of that going on, good luck. It's going to be a lot more expensive.
This one kind of brings the whole GoFundMe thing. right? And I think that that's like become like a popular in the last couple of years, it has become a popular thing, you know, and it's sad. It's
It is
sad
sad.
to see because it's not necessarily that it's sad that people are doing it because because we all need help. It's not. I'm not saying that, so I don't want you guys to take it as that. I'm taking it as it's sad if somebody would take in the time to understand the power behind life insurance, term insurance, all these things that we're talking about today, right? Even real estate, all these things that you can have access to for times like that. I always say money's not everything, right? Money will not fix everything. However, money will at least make everything feel a lot easier. Money's not everything, and typically people that tell me that, I always say, people that tell me money's not everything, tell me, well, you've never had enough of it.
That's true. Oh,
Right?
yeah. They don't have none.
They don't have enough of it. They've never had it, right? But I can tell you right now that, because there's money in the account, because there's money in insurance, because I know that there's that backing that if and when I see any type of hardship, I know that I'm at least going to go through that process a little different, right? Yep. And that's what this is about. You're single. You don't need it. You do need it because at this moment, like you said, you're the healthiest, you're the youngest, it's the cheapest. But now you have parents, you have people to take care of. They can stay behind. And the biggest thing that I want to say is, you don't want your parents, you don't want your wife, just if you guys are just no kids, being out there doing this whole GoFundMe car wash thing. You want to make sure that they can focus on the one thing, and that's to mourn, that's to learn to get past it in that same moment, and at the same time financially they feel okay that that rent's still going to be paid, the cars are going to be paid, all those things are going to be paid. So if you're single, you definitely need it. Okay, once I buy it, can I forget it? I mean, do I just buy it and forget about it?
I hope not. I mean, it's actually common. So people just buy it and they're like, I have no idea. It's been years. I haven't got it. I got it in 2017. So you can buy it and forget about it if it's 30 years. I mean, you can't really do much. But I mean, if you get married and you have kids and you buy more properties, you definitely cannot be forgetting about your life insurance because it's outdated. You got to update it. Just like, an iPhone comes out every year, new products come out every year too. So take a look at it.
So do you recommend for people to review and kind of analyze and kind of get maybe re-quote?
Oh, yeah, 100%. Okay. Or if you even got quoted higher, like let's say you were unhealthy last year and you lost a lot of weight, re-quote. Hey, I want to be able to go get another medical assessment. I'm healthier now. And you just have to prove that you are healthier. And they could give you a new offer. I
agree. One year, I'll share this 1 year. I think it's like my younger days. I got an insurance quote, or I got an insurance policy. The lady came to do like the whole blood test, right? Mm-hmm. And I wake up early in the morning, go work out. I had pre-workout. I totally forgot that she was coming. I walk into the house and she's like, hey, you ready? I was like, oh. And because of that, it hurted me. So then I was like, whatever, just get the policy. And literally a couple years later, I was like, wait. I remember talking to the person. I was like, look, man, like that last time I remember having pre-workout. I stopped taking pre-workout since then, right? Or since that time. And I was like, can I retest? And he was like, yeah, you can. But do you really want? I was like, yeah, I do. I mean, if I can retest and it's going to save me some money, why not? Mm-hmm. Question for this, and since we're here. Is policy higher for men than it is for women?
Yes, that is.
Why is that?
I don't know. I just think men are more riskier, but I don't know. It is true though. Statistically, men quotes are more. But the sad thing is, women, we outlive men. So this is really big. I just want to tap in it because we haven't talked about it. Like if you have a spouse and you're like, my husband handles everything. Well, that's good, but you will outlive him. So at least know what you're managing because. Typically it's what happens.
You gotta know. You gotta know
who you're gonna call.
Exactly.
Like if someone died today, like would Maria know exactly who to call? Yes. Sometimes they say yes, sometimes they say no.
Most of the time is no.
Yeah. Even me and my husband, we work in finance. We have assets together. As knowledgeable as I am, he still has some accounts where I'm like, when did you open that? He's like, I forgot. I opened it in high school.
I mean, let me ask you this: who's your homeowner's insurance policy holder?
I don't.
See, there you go. See, and that's the same thing, because I get calls from clients all the time in the middle of the night. Hey, I have a leak in my attic. It's coming down the house. Who do I call? I'm like, well, call your homeowner's insurance. Who is it? We forget.
Yeah, just prove a point.
Just prove a point.
I don't know who to call.
So now today you're gonna go home and Larry, we gotta know who our insurance policy holders and have that number ready.
Yeah, or even pay the mortgage. I don't know where to pay the mortgage, so I'm like, oh, I hope there's money in the account when God forbid something goes south. So look, even. Yeah. A lot of things
very important. Okay, last question. I think this was last objection. I think this was the most important one, and I feel like, and this is personally for me, when I first started doing this, I think this is the reason I came up with every other excuse was, it was just too confusing.
Mm-hmm. It could be. It really, really could be, and that's sad to say. But I hope that we're knowledgeable enough to break it down in a way that makes sense. And ask questions. I would say that too, but it could be confusing. So I would say like just be a good understanding of like why are you getting life insurance to begin with? Are you getting it for protection? Are you getting it because it's affordable? Are you getting it because your mom told you to? That's a good starting point. And then just ask questions. But work with an agent. This is actually the what makes it complicated though. Working with an agent who can do a term, a whole life, and an IUL. Yes, they're confusing, but at least you lay out all your options because if we want it simple, everybody would get a term. Do we think a term is a solution for everybody? Not exactly, although it may be simple.
Okay.
So simple may not be always the answer, sometimes a little more complex, but just be clear with what you want out of it.
Okay. Okay. And obviously, you're building your agency as well. You're working hard to really, come from a place, a great place. You're a heart-led leader. That's what I see. With you and Larry. So, what is the most rewarding part for you? And Larry, and for you, right? For doing what you do.
Oh man, I love this question so much. I've accomplished a lot of things in my life, and I'm really grateful for it at a really young age, sooner than I expected,
Mm-hmm.
and it was really great. Don't get me wrong, but what ended up changing things around for me is when seeing my team getting paid, like my team getting paid, or they're getting their first offices, or they're starting to dream again.
Mm-hmm.
That is what really gets me going, because there's gonna be a point in your life as a broker or an agency owner, like you'll get the money, and your life will be changed. But at the end of the day, it's whose lives are changing because of you.
Yeah.
And that's where we're shifting now too. And that takes a whole nother level of leadership because you're going now from a personal producer to mentoring and leading people. And that's a
Yeah.
very selfless act because
Very.
you don't get paid till that's like the longest investment of your life. It
I
takes
agree.
it takes longer, but it's the most rewarding. I would say investing in people.
Okay. Okay. So for someone listening right now who's been putting life insurance or even retirement planning kind of to the side or to the back seat or to the back end, what would you say to them right now?
Do you like working? Because that's what's gonna get used to it. Because you're gonna be there for a long time, and it breaks my heart. I know people say, Jasmine, you're so brutal, you're so blunt, but somebody gotta tell you guys, like, if you don't start putting away money for you, you're going to work forever. And you can even look in your family; it repeats itself. There's no secret. And inflation is working against us every single day.
Yeah.
So if you're not investing and you're not putting money away and you're not being proactive, the sad thing is you're going to be exactly in the same spot for a really long time.
I agree. I feel like we're definitely in a time where we're seeing it already. The world is shifting in a very fast way. Artificial intelligence, so many things are happening that I know that if you don't look into this now, you're gonna be in the next part of the history of humans. You're gonna be like, damn, I missed out. And like you said, you're gonna be working to your 100. You're gonna be living with your kids because you can't take care of yourself because you didn't take the movement now. So, I guess last question is it too late, or is it never too late to get insurance?
It's never too late.
Okay.
I would say so. I mean, until you become uninsurable. But the sad thing is you never know that could be in your 20s, your 30s, or 40s, or 50s. So it's never too late until you're uninsurable. And to piggyback real quick on what Mo's saying, like, this is really, really important, guys. It's not you living with your kids. It's your kids living with you.
Oh.
Because you're not taking action on teaching your kids what to do. Like, your kids, the same thing monkey say, monkey do. Your kids will do exactly what you do. So if you're not taking responsibility for your finances, your kids won't either. And if they live with you, they're going to live with you forever. So if you don't like that either, like, you got to take ownership.
Yeah.
And it's sad. And because you're not putting money aside, kids don't learn money management. So the idea of leaving your home to paying a mortgage or paying an apartment, that's a big jump for people that people are too scared to take. And they delay that because it's unfathomable. Like, I can't pay $1,000 to live somewhere else. They'll live there with you.
Yeah.
So it's a disservice.
I just got a little emotional because as you were saying that, I was thinking about my two girls, right? And I have two beautiful daughters, and if I don't take that self-responsibility, even before they were born, but even more now, is like, how can I expect them? I love them to death. They mean everything to me, and doing what we do now, from obviously building our brokerages here and in Mexico, building businesses that we've building and multiplying and leveraging our finances, our money in many different ways. It'll be a very egoistic act not to look a little deeper, at least to understand life insurance, to be like, hey, let me at least be open to the idea of what it could potentially bring for the future. And for me, that was really my turning point, was to be able to say, look, I got to give them a chance to do whatever it is that they want.
Mm-hmm.
I mean, my parents gave me everything in their hands, and I thank them for that. So it's only right that I do the same thing for my kids, to give them everything, opportunity, steps to be able to, and obviously that's part of like my own as a parent is, I'm not saying I'm leaving them. They're not gonna be, what do you call these kids? Trust kids.
Mm-hmm.
They're not gonna.
Babies.
They're not trust. Trust me. They're not gonna be trust babies. I'm teaching them, right? We're teaching them the fundamentals of money, expansion, growth, life. This is why my life and Maria and I's life, like, everything is about taking our kids outside of just what we do here. Mm-hmm. We travel into places. We do things differently. Why? Because we want them to see the world in a different way. So when they come back here and they see the opportunity that we have, right, and that they have, that they want to go and impact the world in a different way. So, I just wanted to share that, because if somebody's listening right now and they're like, why would I do this? Because especially if you have kids like I do, and you're married, it's bigger than just you. It's a generational impact that you're really creating. Because remember this, you are the new ancestor. I am the new ancestor. Mm-hmm. Right? I'm going through that process. That means that people are gonna, my generations will be talking about Mo, mm-hmm. and what I did today. And wherever I'm at that point, at least I want them to go through this world, because I know what living in this world is. I can just imagine what it could be in 100 years from now. So I want to make sure that at least, I have some kind of impact there. So I just wanted to share that. So thank you. Where can people connect with you? If somebody wants to learn today about protecting their assets, their future, maybe they have more questions, because I know, we can't really, we don't tap into a lot of things, but they have more questions. How can they contact you?
Yeah, I mean, number one is my Instagram. I know it's a little bit more modern, but I love it because you get a chance to see my personality, what we do, get an idea of who you're working with. So I tell people what you get on Instagram is what you're going to get in person. So just make sure that you're aware of that. And then also just my phone number. I'm pretty open, with business. So you guys can call me at 661-474-7187. Or maybe text me too. I'm pretty open. But I would just say your name, who you are, and maybe that you're referred by the show.
Yeah. Okay.
That'd be awesome.
Good. So yeah, tag us. Let them. Hey, I saw you guys at the Home Expansion podcast. Either let us know where you come from, because that definitely helps to see where we put in our information. So yeah. Awesome. Any final thoughts? Any final things that you want to share with anybody right now listening? What would it be?
Just take action. Stumble forward. You're never going to figure everything out. But the last thing I'll share with you guys is it does take a team. Obviously, Mo does real estate. We work with attorneys who do the trust. I do the retirement and life insurance. That alone is an entire portfolio that takes a team to do. And you have a tax professional. I can't do Mo's job. He can't do mine. I can't do legal stuff. They can't do mine. So if you have a one person who does everything, like, your financial plan has a lot of leaks. I'll tell you that. Yeah. So work with the right team.
Awesome. Well, thank you so much. Such a powerful conversation today with Jasmine, a true leader helping families build freedom and legacy through educational and action. Remember, wealth isn't just what you earn, it's about how you protect it, but most importantly, how you pass it on. So if you're ready to secure your future, connect with Jasmine. Obviously, follow her on Instagram and start the conversation today. And if you're ready to expand your real estate journey and build long-term wealth through home ownership, connect with us at Home Expansion. Because at the end of the day, that's what we do. We're really good at it. We've done this over a decade. So, obviously shoot us a direct message. Give us a call directly. Don't forget to subscribe, leave a review, share this with somebody, tag somebody that needs to hear this, right? Maybe somebody that's been battling you about, life insurance, tag them and have them call, and maybe we'll bring them to the show and we'll do a second part of this, right? And as always, remember to expand your mind, expand your life, expand your territory. So until next time, keep growing, keep learning, and keep expanding. Thank you.